Hello, good evening, and welcome to second edition of Stock Market Stories presented to you by Stock Market Institute. This initiative is to keep the learning hunger that all of us should have within us to keep understanding a few aspects that we may not be aware of. So, what is the best subject to talk about? So, obviously, the subject that many of us are not well versed with or would like to learn, the subject should be stock market. So, at Stock Market Institute, we have endeavored to bring some learning in this pandemic where you can understand, learn, and also explore new aspects about stock market. So last week we discussed about the Harshad Mehta episode and what happened after Harshad Mehta for the stock market. So we saw during April 1992 we had the very unfortunate scam, financial market scam that was perpetrated by Harshad Mehta. Between 1992 and 2021, as we speak, the Sensex, as it is measured by some number, which was around 2,500, has touched about 52,000. So, this Harshad Mehta episode also has been, though we don't want a scam to be the level, or scam should be the term that makes us to understand market, but his episode actually opened up new vistas, new opportunities for those people who never participated in the stock market. So I'm glad and also proud to have been associated with the stock markets from 1993-94 onwards. So when I joined this industry, Harshad Mehta scam had just got over and I came to this fascinating industry. So what I've understood in these last 27 years of my being part of this market is that still there is a lot of confusion, misunderstanding, and most importantly, people are scared, fearful of entering this particular market. Why is that? See, we don't have to be taught about fixed deposits. We don't have to be taught about post office savings, about gold, about real estate. There are no schools or even there are no courses that are there to teach us all these traditional investment products, because we know this by birth, I would say. Why by birth? Because these kind of things are being spoken in our own families. Our parents, our siblings, our relatives keep speaking about this, and by and large we have been told that these assets or these instruments are safe. So I'm quoting this safe as a very important term here. So everybody wants to ensure that their capital remains to be safe. It should not be distorted. But stock market is completely different from this understanding that stock market, investing in stock market was never a very safe opportunity. It was not safe. It is not safe. It will not be safe, because the nature of this market is to be highly volatile, highly uncertain, fluctuating, and which leads to risk. What is risk here? The risk of losing money. Now, why do we lose money? First of all, we may lose money because we are entering into a zone that we are not very comfortable with. We have no knowledge about it. So obviously we are going to be at a receiving end. So most people, I would say, with my experience, that most people, I would say 90% of people have lost money in the market, stock market, because they don't know how to participate in the market. And there are a lot of discussion that happens between these people, that market crash has happened. In fact, a couple of days ago, when the market fell by 135 points, just Sensex fell by 135 points. One of the medias, that is Z, made a statement, market crashes. Couple of days ago, 135 points or 150 points Sensex fell, when the Sensex 51,000, 140, 50 points is like peanuts. But for just that 150 points, the term used was market crashes. Now, I don't think 150 points fall can be called as a crash, but this is how people are being misled by various what is that places. So this thought process of market crash has made people to stay away from this wonderful investment opportunity. So today, the topic of our second episode of Stock Market Story gets into detail about how do we understand this crash. How do we understand this market correction? Is there a connection? Is there a differentiator between correction, crash? Should you really be worried about these things? This episode talks about, with statistical data, what exactly is a market correction and what exactly is a market crash, and how should we be understanding these concepts. So let me straight away take you into some statistical information that will help you to understand these terms that have made you to be confusing or stay confused about this particular market. So what do we do now? I'm going to share one data that will help you to take this entire learning into a different level altogether. Okay, so here comes the screen. Okay, see, as you can see here, this is the first officially recorded market crash in India. That definitely last week I discussed about the Harshad Mehta scam that led to this market crash. I'm not using the word market fall. I'm not using the word market correction. I'm using the word market crash. See, how do you understand crash? See, on 22nd April 1992, the Sensex was at 4,467 points. Within the next 1 year, exactly 1 year, the Sensex fell by 53%. That means from 4,467 over the next 1 year, the market did not recover at all. It went on going in the descending order. So you can see the number 4,467 to 2036. So 53% fall. This is called as a crash. Why I'm telling you this, I will explain that when I get into the next of the other episodes of market crash. But what is the biggest learning? What is the inference here is that after this crash happened, did market continue to keep crashing? No, there was a point where that crash got arrested. That means at 2036, that crash got arrested. What happened after that? As you can see, the market recovered from that crash. What is called as post-crash recovery. Okay, like accidents happen. What happens? We lie down on the bed, take treatment. It may take sometimes few days, few weeks, few months. Sometimes it may take even a couple of years for us to stand back on our own feet and then start doing our normal work. I'm sure we have experienced that, if not in our personal lives, at least I've seen my own brother who was almost bedridden for 2 years when he had a very bad accident in 2004. I would say it was something like a crash, and he recovered. After 2 years, he is back in action like what he was before the accident. He is back. He was back into his best health levels like that. So stock market also will follow something like a human life's bad time and recovery time. See, look at the crash recovery. Same 26th April 2036. Look at the next date and number. That is August 1994. That means it took about 16 months for the market to go back to the level it was in 1992. So 12 months of market fall or market crash, 53%. It recovered 53%. So what is the moral of the story? You don't have to be scared of that crash. All you need to have the belief, faith, and patience that what fell will recover. That's what happened in the first episode that Indian markets had seen as a market crash. Now let us take the second example. Second example of the crash happened after 8 years. That happened in 2000, 2001 during that tech meltdown. I'm sure most of you people who are from that era will understand what we used to call as Y2K. Okay, so technology was the new digital era. Technology was the new term that was being used rampantly. And that was also an opportunity for another scamster who is famously called, or rather, K10 Stocks. His name is Ketan Parekh, who is now barred permanently from accessing stock markets. So he perpetrated, or rather, he took advantage of this particular period of tech surge. So market had touched by February 2000 almost 6,000 points. Then started the crash. After that, December 1999, that peak market saw, which got into January 2000 also. That was the first we saw 000 as our year. There, the market started falling from 5,933 over the next 1.5 years. Market continuously descended. It never went above 5,933 at all. So it fell by 55%. Again, this can be called as a crash. Okay, but what happened? Like in the previous example, I showed you that the recovery statistics. Here also, the market started recovering. From 2681, from September 2001, it recovered back to the same 6,000 points it was what we saw on February 11, 2000. So how long it took? It took 2 years and 4 months. That means somebody took away your money. You thought that person will never come back and give that money back to you. But one day morning, or suddenly one day, somebody knocks on your door, you open the door and the person is standing there and the person is returning that money back to you for your surprise. You had written off, remember. Stock market is like that. When you least expect, it can crash. When you least expect, it can recover. So there is an inherent nature of the market. So we have seen second, market crash and market recovery. We'll see the third instance. Third again happened 8 years gap. What in technical terms we call this as a Fibonacci model. Okay. Again, we are not here to discuss about this model. I'm just saying as a model, this is also called as a Fibonacci model because it has taken 8 years of that crash. So this time the market crashed slightly higher, 53%, 55%, and 61%. So 8th January, the market saw the peak of 21,000 intraday. It closed on that day at 20,873, making a high of 21,000 that day. One of the best period that market has seen is between 2003 and 2008 January. I showed you in my last story, that is the first episode of Stock Market Stories, that between 2003 January and 2008 January, the market went up by 700%. Okay, so crashed on 8th January. It touched a peak and then started falling. That's the worst fall I've seen in my career. So in 14 months between Jan 2008 and March 2009, market fell by 61%. See, remember, common people are not exposed to even seeing 1% loss on their investments, whether it is post office, bank deposit, gold, or real estate. Look at a loss of 61% only on the Sensex. Imagine the plight of people. Imagine their mindset, right? But what happened after that? After that 14 months of market fall, the recovery started. So between 9th March 2009 and 5th November 2010, I remember 5th November 2010 was the Deepavali Muhurat trading day. The market touched 21,004 on that particular. I can never forget because that is the day I bought a stock called Yes Bank at 67 rupees. Okay. Look at the recovery. It gave you back 61% again. So even on the third instance, the market gave you that opportunity to recover back your money. So all the 3 times you lost, but had you been patient enough, it gave that money back to you. Let's see the last instance that happened very recently. That happened in March 2020, which most of you have experienced this, or at least you have read this news in various media places. Here again, 14 January, market touched 42,000. By 23rd March, that is in about 2 months' time, the market fell by almost 40%. Now, what is the common thing that we can see in all the 4 crashes? That means market had fallen in all the 4 previous crashes above 30%. I'll come to 30% in a moment. So please hang on. Okay. Now, 2 months it fell to about 40%. But when everybody expected that market would continue to fall further, man proposes, God disposes. Like that, an investor or trader proposes, stock market disposes. What happened? From 26,000 points, it recovered in exactly a year's time. It gave us again 52,000 points. 100% recovery. Fall was 39%, but recovery was 100%. Or rather, I would say 39% was recovered in less than 3 months. By June last year, we already saw 42,000 from where it had fallen. So, my friends, what is the moral of the story? All the 4 times market had fallen over 30%. The losses were too big to even imagine, but end of the day, ultimately, the bottom line is it recovered. That means what was some 3,000, 4,000, or even 2,000 in April 1992, it has seen all that up and down, up and down, up and down 4 times and has touched 52,000 today. That's what you want, isn't it? You left Bangalore, you wanted to reach Mumbai, 1,000 kilometers. In between, you had to stop because of tolls, stop because of some road accidents there, because of some galata going there on the road, on the highway. You had to stop, but still you reached there, your destination, without having affected. Correct? You are in same peace. Okay, nothing physically had happened to you. Market is like that. You just started in 1992. You did nothing. You have gone through these 4 crashes and you still stood strong by believing in Indian economy, believing in market as a mechanism, and your 2,000 would have become 50,000 or your 4,000 would have become 52,000. So let's not forget this lesson. So don't blame the market for its crash. You have to understand that you have to play the market as per the market's game plan. Okay, you have to hold the bull by its horn, they say. No? So this is what is the understanding of the recovery. So if you are able to understand this and add a little bit of maturity into your understanding of this market, I don't think your losses would ever happen, or your loss would happen, but you will have a controlled losses. Okay. Now another question comes here is that when do I know that there is going to be a market crash? Can I know upfront? Unfortunately, the answer to this question is not as easy as we think, because it is not easy to say when will accident happen. But otherwise, I would say, okay, some of the people I met during the COVID, I told them, boss, you will definitely contact coronavirus, because the way you are moving around without wearing mask, without using sanitizer, and going into buying vegetables and other things without protecting yourself properly, definitely you are going to contact coronavirus. Okay, pakka. So these people, I would say out of 10 people, 8 people got contracted with coronavirus. Why? Because the way they were moving or the way they were behaving was the end of it was that they would get it. That means even in stock market also, see, I would show you one picture here, because market is called as a bubbles. Okay, anything you take, crude oil was a bubble. It went to $147 per barrel in 2008 July. Now that was the peak. That was the overbought position that had taken the crude oil to $147 per barrel. Today, in 2021, we are reeling at 100 rupees per liter petrol, 90 rupees per liter diesel, at $70 per barrel. Imagine what was it in 2008 when the crude oil had touched $147 per barrel. Okay, it was humongous rise. That was a bubble, remember. See, the first picture you can see on the left hand side, small bubbles. Okay, then it grows to become a big bubble. The bigger the bubble grows, as in the third picture, that bubble has been burst now. That means, as you can see on the last picture here, the bubble actually starts, blowing away. One fine day, bubble will tuck. What happened to crude oil? From $147 per barrel, it fell to $23 per barrel. When? By 2014. So that bubble also broke. Silver, the bubble of silver also broke. Gold bubble also has broken. Stock market bubble also has broken. Even West Indies was the best cricket team in the world. Their bubble also was broken. Australia was the best cricketing team. They never lost a series for 20 years, but India broke that bubble for them. Right? So anything for that matter in life, it is all a bubble. So, but how do you know? How do you foresee a bubble? See, I would say, or I would quote what our ex-former, ex is a wrong word, former RBI governor, Dr. Raghuram Rajan, famously had written in his book called Fault Lines. He had predicted this financial market crisis 3 years before it happened in 2008. So he had said very clearly that this bubble is what is being built in the financial market, which may crash. Now, even Dr. Shakti Kanta Das, our new governor, also mentioned it a week ago, that markets seems to be in a bubble. It's easy to identify that when there is no fundamentals. Now, for example, in IPL, an ordinary bowler like Jaidev Unadkat, when he gets paid some 13-14 crores, that means this person may not have that kind of a capacity to get that 15 crores worth of papers, but still he got. Unless he doesn't perform, that 15 crores would not justify. So what happened next year? His price crashed because his fundamentals did not match with the price he got. Correct? Even last year, Pat Cummins got some 16.5 crores. Okay, Chris Morris has been given one of the highest prizes. Did they live to their expectation? That means the bubble has to burst. Chris Gale bubble was burst, right? So what I want to share with you is that, see, crash will happen. Okay, 4 crash have happened. Will we see another crash in the future? 100%. There is no doubt. But remember, all the 4 crashes in the past have happened for different reasons. In 92, the crash was for different reason. In 2000, the crash was different. Reason I'm talking about. In 2008, reason was different. In 2020, the reasons were different. In the future, again, it could be different. So as an analyst, what people say, I use the term called Fibonacci. Fibonacci is an Italian person who was famous in predicting based on some numbers. Again, I'm not going to bore you with those numbers. It's an 8-year Fibonacci model, 92, 2000, 2008. So as per his, it should have been, market would have been crashed in 2016, which didn't happen. That means the Fibonacci sequence broke. So it crashed in 2020. That to what? The reason of this crash was for some systematic risk. What is that? Coronavirus. Nobody anticipated that a virus would make the market to crash. So 4th reason also was different. So 5th market crash is some away from us. When is that? We don't know. But remember, all crashes are already in the making. Okay, like you see the picture here, it's a small, it precipitates. Okay, it gains momentum. It gains momentum. Like you blow a balloon with your mouth, air, fill that. The more you blow, the bigger it grows. Okay, once it breaks, it hits on your face. Right? So market bubbles are like that. Nobody can stop it. That is the worst thing about market, and nobody can stop it. Okay, you can anticipate it, but how quickly or in what particular day, time, year it will happen, we may not know. But what is the learning out of this? That you should be aware that you are entering a territory where you have no control over that crash. We have no control over it, right? They say accidents happen. Maybe most of the times we may not be at the fault at all. The accident happened because of somebody else's fault, but still I got affected. You could not have controlled it. Correct? Now, somebody else's brake failed and that person came and hit you. Doesn't mean what will you do? But still, we get affected out of these incidences in our lives. like that. The reason can be anything, but still, as a common participant of this market, you and I will still get affected. But the moral of the story, the inference of this market crash, you should always remember that what crash means, you are going to go through. That's the coronavirus we are all going through for the last 15 months. What is that? You know that vaccination is going on, the positive rates are coming down. So probably, we're keeping our fingers crossed in God's grace, we would say by end of this year, or maybe by March 2022, this financial year, we might be about 70-80% away from this, and we are going to move back into normalcy, is what we expect, isn't it? Now, this expectation is what keeps us very active, very alive in the market. Now, how do you compare crash with a correction? That's very interesting to understand. Now, like I said, crash happens in a big magnitude. Okay, a big accident can be called as a crash. But what is a correction? When market falls by 1%, 0.5%, 2%, okay, suddenly 2-3 days. Last week I showed you how market statistics. I showed you the data that continue 3-4 days market falls 1%, 0.5%, 1.5%, 2%, but it quickly recovers. These cannot be called as crashes. These can be called only as market corrections. If the market corrects for continuously for a week, 1 month, it falls by 10%. Still, we can call it is as a deep correction. We cannot call it as a crash. Now, when can we call market has entered into a bearish zone? When can we call that market has gone into a crash mode? When on a sequential basis, if the index falls by 30% and more, then we can say we are in a bear market. People confuse with bearishness and bear market. Okay, bear. I'm sure there are many intelligent people outside, much intelligent, more experienced than I am. But maybe they will endorse this. What is this? When we say market has entered a bear zone, what is the meaning of bear zone? Normal bear is nothing to do with what I'm talking about. Bear zone means there will be no buying interest. People will not even buy Infosys stock. People will not even buy Hindustan Unilever. They will not buy SBI. They will not buy HDFC Bank. Best of the companies they will not buy. The fear would have set into their psychology that you cannot motivate them to buy. How do I know? I have gone through these periods of uncertainty. I have gone through these periods of people behaving like that 3 times in my career. Okay, so I know how I struggled as an important person in my company in 2008, 2009, where I could not even make people to buy L&T, one of the most safest stocks to buy, with one of the best order books. Larsen & Toubro always has. Even Infosys stock fell. Even HDFC Bank fell by almost 50%. Reliance Industries fell from 2,200 to 1,100 rupees in that crash. Okay, so why stocks crash? Because there will be no buying interest at all. Just like somebody has got COVID, they don't have any smell and taste. I have experienced that a couple of months ago. I had lost the sense of smell and taste. I had no hunger. That means I had contracted with COVID, which got tested, and the results came positive. Like that, in the market, when we enter a bear zone, there will be no buying interest. There will be only sellers. 90% of sellers, only 10% you will find buyers. What is a bull zone? Anything you sell, whatever price you sell, any stock you sell, there are buyers. That's why we call it as a bull zone or a bull market. So don't confuse with market correction, deep correction, and crash. Okay, all these 3 things happen not together. It will happen at corrections we see in a month. In a 22-day market, we will see correction at least 10 days in a 22 days market. Monday to Friday market, we might see 10 days market closing in negative zone. So can I call it as crash? No, I cannot call it as crash. Sometimes, if you look at last few years history, continuously 2-3 months market has fallen. Okay, you have seen 10%, 12% market correcting. I would say these are called deep correction, but still they are not crash. So before the crash happens, if you are part of the market, you already will know that there is something cooking up. Okay, I can feel that. Okay, whenever that crash should have happened, that feeling will start setting inside you. The symptoms will start showing. Only the time will tell that when would that crash happen. So if you are in the market, you will start getting that feeling. Okay, that yes, something is not right. It has gone. I was reading something today about this week's prediction in Economic Times. They say this stock has reached an overbought position. That means everybody is buying. For example, JSW Steel recently had touched its lifetime high of about 750 rupees. It did not go above that. It fell below that. Why? JSW Steel was in overbought zone. People had taken that stock to the peak. Now there has to be, like I keep telling market is like doing yoga. Inhalation, exhalation. If you inhale, it is bullish. If you exhale completely, it is bearish, because people are what are those who are participating in the market. So yeah, while I end my session, I would like to say that don't try to change the nature of the market. We cannot change. We cannot change. We cannot stop from raining rather. All we have to do is protect ourselves from rain. Okay. Now people say, what is a bubble? No? When do I know? See, when you see dark clouds, that means if you have dried your clothes outside, you will go get it and come. If you have put something into the open air, you will go get it and come. How do you know? Because there are dark clouds above you. The more darker it gets, rain is definitely going to happen. But if the darkness is not become very blackish, then you will say it may rain, it may not rain. Like that, even in rain, clouds, we can identify if it is pakka going to rain or it may not. Sometimes there is no cloud itself, still it may rain. Correct? Like that, market also is something which is out of our control. So don't try to judge the market. Don't try to control the market forces. All you have to do is control yours. What is that? If market falls, I will stay. It will recover. All I have to have is faith, patience, and belief in this. And let's not forget, when you have purchased a quality stock that has got the right strength as a company, okay, even if the stock price falls, it will recover. For example, the stock Marico Industries, from a high of 350 rupees during March 2020, during that crash, it fell to 234 rupees. Today, it is almost 500 rupees. So what would you do? Because that stock price fell because of market. The company is doing well. Company's financials are strong. All vitals of the company is good. But still, because of market forces, it fell. But it is back to about 500 rupees. So if you are to panic, not understanding that what will fall will recover, you would have sold at a loss and blamed the market forces that, your market is a waste place here. It is only going to make me poor. It is going to take away my money. But had you understood that before I bought Marico Industries, was I sure about the strength of this company? Then today you did nothing. You held on to a good company. You saw that stock being coming down to 234 from 360, 350, but recovered back. So you would be a better, sensible investor, na? Just like Sensex, from 4,000 to 2,000 to 52,000 again. So if this learning is what I want common people to understand, that don't be scared of the market. You will be scared because you're entering a zone without knowledge. Okay, that's why at SMI we conduct various training programs. We have been doing it for the last 11 years, where we make people to understand this through our cutting edge training program that help people to understand this concepts well and then implement them in their real life. So thank you so much. In my next episode, we are going to talk about new topics that is going to come to you coming Wednesday. Thank you so much. Stay safe and stay healthy. Sir.
Yes, sir.
Okay, na?
Yes, sir. We'll end, sir. Okay.
End, sir. Yes, sir.